Madewell.
Well, good morning. This is Tampa Home Talk, and I'm your host, Katrina Madewell. We have another exciting couple of hours lined up for you today in the Tampa Home Talk studio. Join me by my counterparts.
Leo Kane with Barrel Engineering and Inspection.
And good morning, everybody. This is Adam Talley with Talley Insurance.
We got some cool stuff kind of lined up today. I kind of rearranged the show to talk about this big data thing that came through from Adam Data, and they basically watch trends and all this sort of stuff. So we're going to talk a little bit to our buyers this morning, and then we're also going to mention our sellers in there as well, because I met with probably about 4 or 5 or took calls from some of our listeners that are actually looking to sell in the summer, around the summer or spring, right around May, June, July, and they heard me say it's not too early to start planning. And so a couple of these people I haven't even met until next week. And when I start working the timeline backwards, they're going to be surprised how fast it's going to show up. You know, when you're looking at to actually sell, say by July or June or whatever, we work that time period backwards, take into consideration time on market, time to contract, time to close.
Time to declutter the house, right? Because I think we were talking with, her name is escaping me right now, but the home stager, yes.
Yeah.
And that was when we were talking about you got to get in there early, and it's never too early.
Kimberly Smith, she is now.
Yes.
Yeah, so we do spend a lot of time on the planning, the preparation, and we're going to talk about that. So let's talk a little bit about this Adam Data report that came in. So this was
from me, by the way.
This is an
Data report.
ATTOM. And so they were talking a little bit about some of the different neighborhoods that were blowing up and that sort of thing. So we're gonna talk about a few of these. But the premise of it is the Tampa Bay market is cheaper to rent than to buy in almost every county except for one. And we're going to talk about that as we go on the show.
We're becoming more and more like California?
Not yet. We're cheaper to rent than we are to buy. I mean, cheaper to buy than we are to rent.
No,
I think I said that wrong the first time around.
So there's that. Cheaper
Thank
to buy than
you. You
to
guys are
rent.
supposed to be watching me to make sure I get it out right.
I wasn't sure where you were going with this.
Sorry. Yes. No.
Okay, so the opposite of California.
Correct.
No.
Yes. When you said that, I'm like, wait a minute. Did I say that wrong? I said that wrong. Okay.
I'm like,
yes.
Here's a real estate show about the reason why you should rent and not have to use a real estate agent.
Yeah, so basically, almost every place is actually theoretically cheaper to buy. So we're going to talk a little bit about that and the percentage of your housing ratio to your total income. I asked both the gentlemen to calculate it this morning, and I did myself as well, because it's not something we do regularly, right? We do it if you're going to qualify to get a loan.
So why 100? You said to take your housing payment times 100. Why?
That's why it's an old algebra formula I have in my head. That's how I do it.
But if I don't make 100 house payments in a year.
You make 12.
I don't know why
12.
you got that. Where are you going? No. It's your percentage. Your percentage of...
I think she meant to calculate it and then times it by 100, so you don't have a decimal point.
No. She said take my housing payment times 100, and then divide that into my annual household income.
Look, hold on. Let's just write this out. Here's how I have always calculated this, right? Anything you want to know, right? So is over of equals percent over 100. This is the way I've always calculated it.
Is over of.
So if you want to know what your percentage is, that's what I asked you. How much is your percentage of housing income for your housing payment to your income? You're going to take your housing payment multiplied by 100 divided by your income, and that's your percentage. I don't know how you calculate it, but that's how I do it.
That makes sense. But then you wanted me to divide that by another 100.
No, it's not what I was asking you to do.
Yes, it was, wasn't it, Adam?
I did the math my own way.
Okay, so you calculated it wrong. Is that what you're saying?
No, it's still the same percentage.
Okay.
I actually did the formula you told me to do.
Interesting.
Okay.
Anyway.
So you calculated the same way I did.
I did that.
Okay.
I just took payment times 12 divided by income, and that's it.
Okay. I guess. I don't know.
That's
I don't
the easiest way to do it.
I guess we could look at it and see if the numbers come out the same.
And then you just move the decimal point, but yeah.
All right. We have Mark back there on the board today. Are you listening to this chatter?
What kind of math is going on over here?
We need an accountant.
Yeah.
You're an accountant. Text the word accountant to 813-377-2775. That's 813.
So Mark, how would you calculate that if I said how much of your housing payment, how much of your income do you spend on your housing payment? If I asked you that, how would you calculate it? That is not how you calculate it.
I like that method.
That's the Detroit method.
So anyway, some of the hot neighborhoods like in the Tampa region that they have identified is called McFarland, the Plant City area, and then Roser Park. So this is basically McFarland, is right down there by West Tampa, like right above the interstate on the east side of 275. And so basically what they do is they determine what neighborhoods to watch in the largest metro areas, and they look at it for year-over-year growth based on the median list price. And so the report also looks at the median sales price for each neighborhood compared to the metro median price, percentage of homes listed listed above the median. Oh my gosh. Here, you guys just read it.
You got it?
I can't get it out this morning.
You gonna get it?
No, not this morning. Anyway, so going through this, they look at it to see how it's performing year over year. So Plant City's median home price was about $203,000, and it was the second highest of the neighborhoods kind of in their surrounding area. So 21% of homes sold in Plant City sold for more than the list price. So they look at this too to see like, okay, is there certain neighborhoods that are trending where basically there's a list price and then it's always selling above the list price.
Gotcha.
That's how they determine kind of which neighborhoods are on fire. That's what I was trying to say. So Roser Park is this little community in St. Pete, and it had the lowest median sales price and percentage of homes sold above the list price. And so 3 of their neighborhoods were at $150,000, and it was 8.9% really above the list price. And then Tampa Bay had some of the lowest median sales price percentage of homes sold above the list price. And we also had the shortest days on the market of any metro they evaluated.
Really?
Which was pretty cool.
That's awesome.
Yeah.
So now some of the counties, it's interesting because Tampa Bay, they make up of a lot of stuff. And then some of these reports, and Adam takes into account like the Sarasota area.
He does?
You're welcome for all this hard work I put in for this show today,
So Sarasota County basically was cheaper to buy than rent, but barely. 45.5% of people's wages go to renting, where 45% of wages go to buying a home. So they were pretty well balanced, but almost all of these were. It's better to buy.
A really high percentage going towards your living. Is that?
There's a lot of people.
Is that common?
Yes.
Wow.
More
Yeah,
common than we
definitely.
see. Yeah.
Wow.
So Hillsborough County.
Everyone can live the Dave Ramsey way.
So let's just put it out there. So Hillsborough County, you're both in Hillsborough, gentlemen.
Yes.
So it had one of Tampa's biggest markets, of course, is Hillsborough, not only by mass, but by people. So it saw less than a 2% difference between the wages spent on housing between the buyer and renter. So 35% of people spend basically, that's their housing percentage when they purchase, and 37% of renters spent, that's their percentage. Renters spent 37% of their income on housing.
And buyers spent 35%.
Correct.
So that's pretty close.
Yeah, it was very close. And they also found that while renting or buying would become physically impossible in 855 counties across the whole country, they did this by compiling rent data for a 3-bedroom property in 2020 from HUD. They pulled their data from HUD, and as well as the average weekly wage data from the Bureau
How does HUD
of
have
Labor
2020
Statistics.
data?
They're basically pulling projected and 2019 home price data.
Okay, projected 2020 data.
Yep.
I was going to say we're too new into you're too new
No,
into
it's the
2020
rental
for any
data.
government agency to have any
they're
kind
Haven't even
looking
finished
at-
the first month.
They're looking at rental data.
They haven't even. Most governments haven't even opened the mail I sent them for your commercial policy yet.
True.
Anyway, so this data and home buying, it took consideration 3% down payment. That's the minimum you can have on a conventional home loan product. When we come back, we're going to talk about Manatee and Pasco, talk about where your housing ratio is, and then we've got a bunch of information and data, including the zip codes, to talk about what the average rental payment is in that zip code.
I can't wait.
Anyway, if you want some of this information, you can reach us at our offer number, 813-377-2775, 377-2775. And if you have any questions, you can hit us up on our on-air number. And Mark Charles will give you that in just a few minutes when we come back.
Well, good morning. Welcome back. Leo Kane here with Barrel Engineering and Inspection, joined by Katrina, who had a very interesting offer.
We're not going there yet. I know you're excited about it. I can tell. You see him?
The wheels are turning.
Adam,
that
take
head
it
of
from
his.
here.
Oh, well, welcome back to Tampa Home Talk. Adam Talley with Talley Insurance, joined by the math whiz herself, Katrina Madewell.
Not this morning. I can't even get the words out right.
A wordsmith. Bass Withered and a wordsmith.
No, I can't get anything out right this morning. Anyway, Manatee County. Let's talk about Manatee real quick. So they stood alone as the only local county where it was cheaper to rent than buy. So 48.4% of their income, that's what renters spent, compared to 53.9%.
Is that because people are poor in Manatee County, or
it's expensive,
or condos are just more expensive to buy?
It's expensive to live there. So in Pasco,
I would think all the new construction in Manatee County would balance that out, right? Because the new construction's a little bit more affordable for families.
Well, I mean, Manatee is just north of Sarasota, so I mean, some of that area has gotten.
Oh, these don't count condos; these just count homes.
Single family, 3-bedroom, 2-bath homes.
I don't understand why Manatee's so expensive.
It just is.
Or maybe they're not listening to Dave Ramsey, so they're spending more than they need to on housing.
So renters in Pasco are spending almost half, about 49.4% of their income on rent, and 34.8% is the percentage for homeowners. I know I asked you gentlemen this before the show. I calculated my own. Mine's about 8% that I'm spending on my housing payment. That's total for myself and my husband. What about you? What's your housing payment?
15%.
So 15% is a great number.
0.3%.
And he was less than 1%. The number cruncher himself, the bean counter, is less than 1%.
That's not taking into account down payment and all that other stuff, right?
No, it's just your housing payment.
Right, but also keep in mind that, remember last week when we were talking about the zip codes and which zip code had the lowest price houses?
Yes.
Yeah, I got in on that zip code pretty early.
Okay, makes sense. Perfect. All right, so there's a whole report. What I wanted to do was kind of peek through this. I'll let you do it, Leo, since I can't spit anything out.
I wanted to talk about another topic.
We're going to. Don't worry. Don't worry. So the zip code. Find your zip code on there, Adam, and let me know if that's in line with your housing payment.
33602.
Let's see here.
I'd be curious. I think I'm in line for my zip code,
33602, and let's see. We're
going to let you know where it's better to buy than rent.
So let's see. Efficiency. What does that mean? What does that mean on this?
Efficiency is...
well, I know what efficiency means. I'm just saying, what does it mean in relation to this?
Efficiency is like a studio.
Yeah.
Oh, okay.
It doesn't even have a bedroom. It's a studio. It's like a motel, sort of, like a hotel.
And this is they're saying Holiday this is the average. Is this rent or home price?
That is the average. I think that's rent. That's rent.
I would say that number actually looks a little low, but I guess 33602 might also include
downtown.
Downtown.
That's a big part of downtown.
Yeah, I'm 33602. So it's saying for a 1-bedroom, it's $1,470. I think that's a little low compared to what I've seen out there, because that includes channel side and stuff, and that's probably $300 less, I would say, than the average one in channel side. But then the 2 and the 3 bedrooms add up there.
Let me see mine.
Let's see, Tampa Bay. Yeah, it's fair market rents.
I got the wrong. Yeah. This is all Riverview. Where's
You don't want Riverview?
No, I don't. No,
he needs this one.
I probably need the same one Adam had.
Yeah.
Yeah.
A lot of numbers on there.
With really low numbers on my zip code.
Leo's like, I don't want to talk about this.
No, it's just really low numbers.
It's good. That's
good. Your 3 bedrooms right here. You're 605.
Yeah.
1320.
But I got 5 bedrooms, so that's not even on.
1610. Oh no, you're just add a little more.
You could almost have a boarding house where you're at.
Yeah. Let's see. 1, 2, 3, 4, 5. Yeah, 5 bedrooms.
Interesting.
Plus, not counting the detached suite, which is actually 2 more bedrooms. So I have 7 bedrooms.
It's an older bungalow, right?
Yeah.
Yeah.
Would you call it a bungalow? I'd call it more of
ranch
a
style,
sprawling estate.
Yeah, ranch.
The Kane estate.
Yeah.
Oh, what am I going to do with you guys?
I don't know. Are you looking for your zip code? What's going on here?
No,
Katrina?
I wasn't. I should. I should. This is your, it talked about Harbor Island. Hold on, I'm just trying to figure out what I want to share and what I don't. Because some of this is kind of boring.
Well, Harbor Island, the thing I found most interesting with that is there's been a lot of the apartment buildings that have sold for hundreds of thousands of dollars per unit there.
Yeah.
Which is ginormous. It's crazy what's going on.
It's almost like condominiums cost more than houses.
Yeah.
And
then you add the fees on there, too.
Here's mine. Yeah. My payment is way below this. So I have a 4-bedroom, and it's saying that I could rent my home for almost $2,400.
Oh, that's how much we could rent it out for?
Yep.
Oh, you could be making some money here, Leo.
Yeah. But I still have to live somewhere.
You have to live somewhere, yes.
That's the big.
Your wife would not.
You're a land baron. You probably have other places you could go stay at.
Well, yeah, but none that meet my wife's standards.
I was going to say, if you want to stay married, you're staying in your house, right? So, all right. So the other thing, too, we're going to chat about just for a minute because the new report's not out yet. It'll probably be May before it comes out. But did you guys know that the National Association of Realtors, every year, they put out this report. Last year was 196 pages, and it talks about the profile of a home buyer and the profile of a home seller.
Wow.
Wow, we could
Sounds like a little light reading there.
We can turn that into a top 10 and turn that into an hour show.
Well, we're going to talk about this a little bit. Because I have the one from last year, from 2019, because I want to see kind of how this stacks up to the new one that will come out soon. We're still waiting for a lot of these numbers. But some of the characteristics for first-time home buyers, they made up 33% of all home buyers, and it was a decrease from 34% the year before. So in Florida, 24% of people were first-time home buyers.
Wow.
And the typical buyer was 46 years old. The median price, and this is not first-time home buyer, just the typical buyer, was 46. The median price for the income, it was in 2017 at that point, was $91,600.
Wait, so last year's report is 2 years old?
It's May.
Okay, so May of 2018 is talking about...
May of 2019.
May of 19
would have been a 2018
It's talking
report.
about 2018 stats.
It's talking about 2017 income.
Correct, because it was a 2018 report.
Okay.
Make sense?
Yeah.
Okay. Anyway, 63% of buyers were recently married couples, and 18% were single females, 7% were single males, 9% were unmarried couples, and 63%, or in Florida, 63% were married couples. This was the national one that they do compared to the Florida one.
Okay.
So Florida, 63% were married couples, 19% were single females, 18% were single males, and 6% were unmarried couples. 12% of home buyers purchase a multi-gen home to take care of aging parents. So I think, Mark, are you still in that position where you're a multi-generational home? Are you're living with your parents? Yes or no?
I've been in and out. I've lived in different countries on my own.
Yeah. But there's a lot of people that are either like the college kids come back and live with the parents, right? Or they the older parents live with the people with the kids. So we see quite a bit of that sort of stuff, and that's
where
all.
The mother-in-law suite comes in, right?
It's all multi-gen, yeah, and we see a lot of people with different cultures as well.
Shove them in the backyard. Shove them in the backyard.
Nothing to see here. Move along.
Now we get out as soon as we can for the most part. I moved back home simply to save money and buy a home rather than.
I did the same thing, Mark. So I lived on my own, and like from the time I was probably 18. And then when I was, I don't know, I stayed in my place like about a year. And then I moved back home. I saved money. And then, no, I was probably 20, I think, when I moved back. And then I saved money for about a year, worked 3 jobs to buy my first home. And then I moved out.
See,
I bought my house. See, there you go, Mark. Well, I've been talking to you about this for a long time. It'll be here before you know it.
See, I wouldn't mind doing that with my parents, but they live so far away from everything. They're down at Apollo Beach.
Perfect.
Yeah, no, it's not perfect.
Speaking of Apollo Beach.
Yes.
Yes, we're going to be there in a couple weeks, the 21st.
Yeah.
21st. Ooh,
Yeah, we're going to be doing a live remote broadcast from one of our amazing
If I ever
listings.
get the email, I'll be very excited about that.
Well, we've sent it twice. Leo got it.
I'll have to rent a boat to get there since Apollo Beach is so far away.
Well, this is not even. This one doesn't have water behind it because it's in water set, but there's no water.
So 12% of the people on this.
She just totally ignored us and just kept going.
I know. She just doesn't care anymore.
I'm listening. Water set. We're going to water set. Yes. 12% of the people are basically multi-gen home people. So, this was, and so they measure a lot of stuff. So, 89% of recent home buyers identified as heterosexual, and 4% as gay or lesbian, 1% as bisexual, 7% preferred not to answer, and in Florida, 89% identified as heterosexual, and 5% as gay or lesbian, and 1% bisexual. So they literally do measure everything. It's 196 pages. 86% of these home buyers are veterans and 3% active duty. 21% were veterans and 3 on active duty. So there's a ton of this stuff if you're interested in even getting like the short and skinny version, which is only about
That's what we're talking.
5 pages.
We're talking the short and skinny.
Yep. It's 5 pages. We can send it to you. It's last year's report. We'll have a new one in May.
813-377-2775. Text the word skinny to 813-377-2775.
And I had something totally lined up for first-time home buyers to-do list, and we'll talk about that one come back right after the break. Stick around.
Well, welcome back to Tampa Home Talk. And before we dive back into this wonderful discussion about all of our new home buyers and home statistics, and I think a nice little tease for a sinkhole discussion here, our insurance tip of the week. So, interesting case this week.
Are you going there already?
Yeah, we need to.
Then we got to share the story first.
Well,
No.
the tip is
tip of the
different.
week. You're stealing the thunder.
Well, the
I know,
insurance
right?
Adam needs to be the thunder.
Yes, well, the insurance tip has nothing to do with that. So the insurance tip is, even if you are a cash buyer, you need to make sure that you're getting all the inspections. So I had a cash buyer this week that bought a house and just got a normal inspection, which is good, so they know what's wrong or not wrong with the house, but they never got a wind mitigation. So I was going through with him on the quote yesterday because they closed yesterday, and I showed him the price. It was about $2,500, bigger house. And I was like, did you get a wind mit? He goes, no. I said, okay, well, let's just play with the numbers just so I can show you what one could do. Took it from a little over $2,500 down to $1,400, and that's just with the basic.
If it's favorable.
Oh, and I told him like if you have clips, this would be it. But even if he just had toenails, and we're just putting in that it meets the basic, pays for itself.
Because the insurance has
$150.
changed a lot over the years. Like,
oh yeah,
when the way they pretty much redo it, it seems like now it's priced at a premium, and then to get your discounts, you've got to provide those.
Put it like this: if you didn't have, let's just say, because they're assuming if you don't have the wind mitigation that the roof isn't going to meet.
Scenario.
Yeah, worst case scenario, and they're, rate reflects risk.
It didn't used to be that way, though, is what I'm saying. Like,
well,
insurance
they also used to do everything on carbon paper. So
right.
I mean,
You're right.
we have boxes from 1983 that have carbon paper and handwritten, rating on it. So things changed.
You remember those mimeograph machines with the purplish blue ink that got everywhere?
Yeah. So, anyways, that was the tip. So always make sure you call somebody like Leo that's going to do.
I'll add one. Let's add one more in there too.
Yeah.
You made me think about a story. We had a client one time that bought a house, paid cash, and essentially she got her homeowner's insurance. It was in a flood zone, and we said, "Hey, don't forget, get your flood."
Mm-hmm.
Yeah, and we have even an email where we reminded her to do it. And they never did. And the whole house flooded, and it was a total loss.
Wow.
Oh.
Well, and here's the thing with that too. A lot of our carriers, even if you're bought by the house in cash, if you're in a flood zone, they require that you have a flood policy.
Oh, good.
So a lot of carriers are like that now. So you have to.
People protecting themselves.
Well, because even if you sign on the application that flood is excluded, right, and everybody knows it's excluded, they still, if you try to file a claim and they need to fight it against you, they still have to pay for a lawyer to tell you that it's excluded. So that's kind of how they do it, is to protect themselves as well.
Got it.
Helps the bottom line.
All right, so let's go over some of the to-do list for our first-time home buyer, shall we?
Yeah, I think number 1 is very important. Dave would love that.
Save.
Save.
So there's quite a bit of expenses you're going to have other than your down payment, right? You're going to have closing costs and then insurance, of course, which is paid for the full year in advance.
Yes.
Prorated taxes, all that sort of stuff. You can get a credit a lot of times from the seller, but it makes your offer super competitive for not asking for closing costs. So
Yeah.
if you need it, then sure, we'll ask for it. But save. You can't have too much money. All right, number 2, improve that credit score. You cannot get that high enough.
Did
ever.
Dave write this list?
Dave did not write the list. Actually, from Florida Realtors.
That's
So-
too pretty looking for Dave to have written.
Definitely, yes. So a couple little things on the credit score. We can give you some tips, and there's some older rules that we see some people still try to follow, right? Like, have you ever heard someone say, keep your balance 25 or 30% of your credit line? Have you guys heard that before?
Keep your credit close. And
Your balance on your like if you have a credit card, keeping your balance 25 to 30% of your total line of credit.
I thought you would want it as low as possible.
Yeah.
It is, yeah.
I keep it at 0.
It used to be 25, 30%. Now, as opposed to 0, if you're trying to increase your score,
Oh yeah.
we do what they call simulators a lot and run these to find out how we can pop the highest score, right? Because it determines what kind of rate you get. And so many times, I would say 80% of the time, putting $10 on a credit card can increase the score by 50, 100, sometimes 200 points.
Interesting.
Yeah, because the credit score is how easy it is for the banks to make money on you.
Love it.
It's your debt, your
Yeah,
repayment of debt.
It's not your ability to pay down the debt. It's your ability for banks to make money on you.
Interesting. Now, on that 20-30% rule for those listening, is that going to be per card or is that going to be across all of your credit?
So the old rule used to be if it was 50%, then it got better with 20 to 30%, and literally we see a huge difference if there's $10 on the credit card.
So you're saying like like about the same percentage that for Leo's income to housing payment. You want that like 0.0003%.
Well, again,
Basically, you buy a candy bar and you pay it down slowly.
Well,
very
we
slow.
say
$1.
no. We say gas. We say put $10 worth of gas in your car and then pay it off at the end of the month and do it again next month. That's going to give you the highest possible score.
Well, and it's safer to buy gas with a credit card because most credit cards have that
Right.
frog protection.
You save 8 cents a gallon if you use cash.
If you go to a place that does that, like
Most
Wawa
of them
doesn't do that.
They all do.
So here's the thing. If you're trying to improve your credit score or you're looking to buy, so this one's for you, Mark. Make sure you're current on your bills. No major purchases. Don't buy a car for the garage you don't have or appliances for a kitchen you
Buy
don't
the
yet
car
own.
on the credit card.
No.
I've done that.
And don't cancel any credit cards either, because that can actually significantly impact your score. Like if you cancel or close a credit card, we've seen where it can actually make your score disappear if that's your only one you have.
Wow.
You just call them and keep lowering the limit.
And so here's the thing I'm going to talk about with credit scores, because I know Dave preaches a lot. You don't need a credit score, which is true. You don't. You can get a manual underwrite. However, lenders do what they call risk-based pricing, and if you don't have a credit score, I can assure you that rate and the interest, and it will cost you more money
Wow.
if you don't have a score. And I've had this conversation one-on-one with Churchill Mortgage, which is Dave's endorsed lender, just to make sure we're on the same page, because that's my background is lending, and I'm correct. It's risk-based pricing still, and if you don't have a score, the pricing will be higher.
Go get you one that gives you some points or some money
Yeah,
back or
$10,
something. You can make
literally.
money on it.
Yeah, $10 a month and pay it off every month.
Miles.
You can close it
I
afterwards.
get 3
if you want.
flights. You can sign up for it at the airport.
So the
I
third one
remember
is
back when they had those predatory lending tactics and they used to give you a hat to sign up for credit cards. Here's a free hat. Sign up for my card.
they did that so much of college students. It was sad.
Yeah, they actually passed laws to help prevent that.
Thank goodness. Anyway, number 3, calculate how much you can afford. So again, you want to be 25% or less on your housing payment compared to your total income. So that's kind of what Dave preaches. That's what we believe as well. You can go higher. You can get approved for higher. It doesn't mean you should, right? But calculate what you can do. And then get pre-approved versus just pre-qualified. There's a big difference here. So the pre-approval versus the pre-qualification, do you know what the difference is, Adam? Let me ask you.
I would think approved would mean that the money is solid. You can go ahead and buy that house. You're going to clear underwriting. Qualified would be, well, we could probably do this, but maybe not.
Sort of. Yeah, sort of. You're on track. But what's the difference? Like, do you know, like, diving into the process.
Maybe one, they pulled your credit already.
Yep.
The other, they didn't.
That's part of it, but that's not the only thing.
You got me, man. I
No,
thought I was doing
you're
pretty good.
great. So a lot of times what happens if you go through like Rocket or Quicken or some of these ones you see, they'll pull your credit. And they'll give you a pre-qual letter. But the difference is, you said they'll take an application, they'll say, okay, I make this much, I have this, that, which they can verify with the credit, and you're just generically kind of giving them all your information on the application. That's a pre-qualification. They say, okay, based on everything you told us, you can qualify for this amount. We've looked at your credit. Pre-approval means we've verified all your stuff. We've looked at your bank statements, your pay stubs, your tax returns. There's no big surprises in there. We know you can qualify for this. Some of them even will run it through underwriting to where all you need is clear title and an appraisal, right? We talked about that last week on how to make a competitive offer if you are not paying cash. How do you compete against a cash offer? That's one way. You could technically waive your financing contingency and just get an appraisal contingency instead. And so the solid pre-approval really matters. And I can tell you as a listing agent, if we get multiple offers on a property and we see some of them from like Rocket, Quicken, BOA, some of these, big box banks that you can't ever get a person, it's an 800 number, compared to like a local lender that we know, and the offers are comparable, we're going to take the one from the local lender that everybody knows. Because we know we can get somebody on the phone if there's a problem. We know there's a better chance of that thing happening on time, the way it's supposed to. If there's any surprises, we'll know it early. And literally,
it's business. You don't want to waste your time, right?
I've had major military credit unions that literally the closing date came and went, no communication, didn't deny the loan, didn't approve it, nobody's answering the phone, like insane.
Oh no, that's not good.
Like big companies that, that people count on and you would expect them to perform, but they don't.
Wow.
Anyway, number 5, decide what you want in a home. So a checklist is really, really important. We actually have one that we can give you. And so this helps you kind of prioritize some of the things maybe you're not thinking about on what's most important. And so if you want this and you're looking, it's 813-377-2775. It's a great place to start. You can call or text 813-377.
And this is a one-page infographic, as opposed to a 200-page book.
That's right, yeah.
One-page
we actually have this
infographic.
too, like where you define your dream home, which is also one.
Can I have
chickens?
Infographic? One-page infographic?
Can I have chickens and lots of dogs? That's what we're looking for.
But you're describing my house, aren't you?
No, heavens no. Unless I can live above the garage.
Above the detached garage?
Yeah.
It's a one-story detached garage.
We'll
I guess you can live above
in the attic. All right. Number 6, choose a realtor. And a lot of times I think this probably should be number 1 because we can guide you through all of this stuff we're talking about.
No. Save is first.
It is on the list.
And you do need to get pre-approved. Because I think a lot of good realtors like yourself, if somebody comes to you and they're already pre-approved, if you're super busy, that's the person you're going to pay attention to, I'm sure.
Not necessarily, because sometimes if they come pre-approved, I don't know how good that pre-approval is.
True.
Right? If I don't have a relationship with that lender, I don't know. Number 7, visit homes. So this part's really important, and it's interesting because remember this profile we were talking about of the home buyer and home seller, the 200-page report? It's interesting because one of the stats that we've been following closely, and I can't wait to see the next one, because 2 years ago, the average buyer would look at 11 homes or less before they chose the home that they were going to purchase. The one from last year was they look at about 6 homes or less.
That's not enough homes.
The only 6 they can find.
No, but it is. I'll tell you why when we come back after the break.
No sinkhole story?
Yes, we are. We'll get time for it, I promise.
Really?
We will.
We haven't even gotten through this top 10.
Well.
And it's 12.
If you want the list, you're going to have to call or text us. We'll give you the whole thing because we're probably going to run out of time on the air. 813-377-2775. 813-377-2775. And we'll chat about it a little bit when we come back right after the break. And I'll tell you why home buyers are looking at 6 homes or less before they pick one. What do you think about that, Mark? We only got a second.
I can't wait to get back from this break.
All right. We'll talk about it. We'll be back in a moment.
Welcome back. This is Leo Kane with Barrel Engineering and Inspection. I just counted till 5 in my head and figured we were back.
Must have been.
Yeah, so we are live on the air, Katrina.
You must be.
Yes.
I'm proud of us. We did it.
We did it. We're back on the air. High five.
All right.
Good. We got
They
to
didn't
hear
cancel us.
Our music beds are gone, but that's okay. We don't need those. Who needs music beds? There they are.
Oh,
We
there
can
you go.
now.
No, he did that thing that Pat taught him how to do where we couldn't hear anything.
Oh, I love that.
So
So
I
it
just-
gets the heart pumping.
Well, now that I've been in control of the conversation, let's talk about sinkhole.
Yes, let's dive
Not
in.
yet. We gotta.
We are running out of time.
We have time.
We
don't
have
worry.
8 minutes left.
We have plenty of
Okay,
time.
fire away,
All
Katrina.
right. So we were talking about right before the break, the National Association of Realtors does the profile of a home buyer and a home seller, and the number of homes that buyers look at has significantly gone down before they actually choose the one that they buy.
Mm-hmm.
Now, any idea why this is?
Does that they can do all that pre-research with the pretty
You
pictures?
don't get to answer last. You answer. I want Mark and Adam. You guys answer. Why do you think the number of homes that buyers physically look at before they pick one has gone down?
Everything's online. But I would have done when we were looking for houses before, I did all my own research too, because
Yes.
I'm deep in it, you know?
So that's the thing. And actually, as of like this week, the number of photos in the MLS used to be 50, and that's slowly gone up over time. It's now 100. We can put 100 photos
Wow.
in the MLS for where people look. And so that's what I think the difference is, right? There's a lot more information than buyers ever used to have. The way it used to be, you would come into the agent's office, you would look through this MLS book, none of it was online. You would count on the agent to be familiar with the inventory and show you exactly what you said you wanted, right? So you could look at a lot more homes than maybe you would in the past. So we saw that number go from 11 homes or less before they pick one to 6, and it'll be interesting to see what the next report says that comes out in May. And it's because they have a lot of photos, so they can eliminate ones before they ever even see it. So 83% of buyers choose what homes they're going to look at based on the photos.
I would think, I would think that like 5 or 6 would probably kind of be like the floor, because you got to think, especially with how competitive it is out there, even if you go look at 1 or 2 and you're like, I want that house, not everybody's getting the house they want every time, right?
And that house could be gone by the time you decide you want it.
Exactly. So I think like 5 is probably the floor in my opinion.
There's a lot of times too where sometimes we'll see the best home first, and the buyer's comparing everything to that, and they're like, but I can't buy that house, it's the first one I saw. And it's like, well, if you're still talking about it and every other home we're looking at, you might think about that.
If you love it, you love it.
Yeah.
Do it.
I mean, you're going to get your inspection period to get out if you change your mind. You know, all of our contracts are as is with a right to inspect. So if you don't like it for any reason at all, you don't have to buy it.
And that's why I look at 0 houses before I put my offers in.
That's Leo's strategy entirely, but it gives you the option to decide whether you want it or not without someone else deciding it for you, because they've already solidified a contract on it.
Perfect.
So, all right, Leo, let's get to your story, and we won't finish
It's
our
your
12
story.
list. Okay, so we had a call from a client that hears us on the air, and so let's talk about this for a minute, because sinkhole coverage, for the most part, is excluded on most of our homeowners policies.
It is excluded on all of them.
So all of them now.
Everybody has catastrophic ground cover collapse. That's That's a state mandated coverage with all the standard homeowners carriers, and you can apply for sinkhole coverage. However,
It's not worth it.
in my experience, the
It's
underwriters
expensive.
are looking for any reason not to add the coverage.
Okay.
Right?
I thought they'd be looking for reasons to add it. I mean, it's an 80% deductible. It's a
it's
$30,000 a year
well,
policy.
yeah. So basically, the process to get it would be you still have to bind the policy without it. It's usually a split cost for a sinkhole inspection between you and the carrier. So $100 out of pocket, whether they add it or not. That inspector's going around looking for anything. I'm talking cracks in the sidewalks, cracks in the walls.
Every house has
cracks,
that.
Cracks on your next door
Wait,
neighbors.
they pay that inspector $100 to do a
I think $200. 'cause it's
structural and
split.
geotechnical.
Well,
No.
I don't think they're doing
I think it's a
structural.
visual
yeah.
inspection.
And then they're going to send it to the underwriter. The underwriter's going to look for any reason not to add it. If there's some miracle that they add it for you, you're talking $300 to $500 extra a year,
Oh no, we're seeing more than that.
plus a 10% sinkhole deductible. So if you're in a
It's more than
$300,000
$300 or
home,
$500.
And it's more than 10%.
it's 10%. So if it's say a $300,000 home, that's a $30,000 deductible before they're going to pay a dime.
Okay, so the catastrophic ground collapse.
Mm-hmm.
Let's talk about that, Leo, because that's kind of your expertise in your area. So what happens when someone is actually making a catastrophic ground collapse claim? Because it's a whole report that you guys are doing.
Yeah, so when there's a catastrophic ground collapse report, it means the home is not safe, the home is not livable. So you have geotechnical and physical characteristics to the home, which means that something's going on underneath the home.
They can physically see cracks on top.
And they can physically see there's 5 criteria we have. Cracks are actually not part of the criteria. They aren't, but we have 5 criteria.
So what are you looking for?
We're looking for 0.7 inches of height difference in the slab over 10 feet. We're looking for walls that have shifted more than 1/3 of their plane.
That's a movement. That's probably a crack there.
We're looking for it happening after 2014, which is a weird one of the 5 criteria is it has to have manifested after 2014.
Okay, I'm not sure how you'd measure that, but okay.
Well, it's easy.
Okay.
But yeah, those 3 are the 5. So we're basically making sure that the house.
What's the other 2?
There's another 1/3 plane shift.
Okay.
So that's that.
He forgot one.
I forgot.
Look at that. He forgot one. Okay.
Does the house have substantial structural damage?
Oh, well, that's okay. Yeah. How did we forget that one? I don't know.
Yeah.
Cracks just aren't a technical term, but you,
Well,
you would have them if any of this stuff
Since
was
almost
happening,
every
probably.
house has the 0.7 inch over 10 feet differential, just because of normal settlement, that's the one we go for.
And that's a long process, right, to determine that. It's not a 5-minute thing.
No, we use something called the zip level, and we take a floor elevation survey.
And so the reports are
They're beefy. I mean,
a lot of pages.
well, no, our structural report could be 2 to 3 pages long.
No. The actual catastrophic ground collapse.
Well, the one that also has the geotechnical piece with all the
Yes.
soil boring data
With
and the
the
GPR.
geotechnical part,
Yeah, those
yeah.
could be 70 to 80 pages. But
Yes.
the structural report usually is 2 pages and 5 photos.
So let's say you have a catastrophic ground collapse claim. They've agreed in your favor. You get an insurance payout. House is demolished. Now I want to sell the land.
Well, that means I have 1 minute to explain the whole thing.
You got it.
So basically, what you're describing is an unremediated sinkhole.
Yes.
So they got the payout. They just got rid of the house. They didn't actually improve the soil. They just got rid of the house and kept the rest of the money. The insurance companies have things in place now to prevent that from happening because they're actually paying for work done. But your land is unremediated. And if anything happens to any of the surrounding houses because you didn't remediate the sinkhole, they can come after you personally.
Which could happen.
Yeah.
All right. We're going to talk about this soon. And our offer number is 813-377-2775. 813-377-2775. You can call or text if you have a question or a cool story. We'd love to talk about it on the air. And remember, love where you live, or we're going to fix it. We'll be back for hour number 2 in just a moment. So stick around.